All red. That's nice. So let's see. Start with a little preface here. President-elect during the campaign made one thing very clear, and it was instrumental in his winning the election. Prices are too high, and they're going to come down on day one. And he said it over and over and over and over and over and over and over again in different ways. And he kept talking about the price of bacon and tomatoes, and he grouped this stuff of rising prices as in a term that I guess he thought he invented called groceries. He said they call it groceries. Now we're not getting into politics. I know he's a hero to some of you folks, so this is not about him, because some of you are still in his thrall. So it's not about politics. What it's about is this is a template, I think, for not just him, but a lot of beliefs, promises, pledges that are going to go next year. Because even now, a month before inauguration, in spite of the endless instances of like, I'm going to make prices go down, how he didn't say, but I'm going to make prices go down on day one. He has said quite clearly now, nobody can do that. Nobody can do that. So no, whatever. So it's been basically blown off. Like, forget about it. The blowback has been zilch. And, so for example, if I was here day after day after day for a month saying on January 20, I'm going to tell you a guaranteed way to make money in the stock market, no questions asked, it's absolutely guaranteed. I personally will back it. And January 20 comes, I'm like, talk about other things. You would be a little peeved because I'd made this solemn pledge of something very valuable to you. And I just blew it off. There'd be a lot of blowback in that case. But in this case, there's none. And get used to it. Get used to disappointment. Get used to promises being forgotten or broken. And Powell did his thing just now, the last time of the year. This is 8 out of 8. And he did exactly what was expected, which is he inched rates down 25 basis points. And the market is in a free fall. We've got a triple-digit drop on the ES, which I can't even remember the last time we saw that, I think decades ago, but big plunge across the board. Because it's pretty clear, based on what the Fed announced, that this is it, Bucky. There's no more guts after this. Why? Because inflation's going to come roaring back, and they're going to have to raise rates. So the cool part, I think, of the forthcoming year, it's going to be a ball. It is going to be a ball. I'm very excited about 2025. And it's going to be, I think, a very chart-friendly market. The only bad thing is that in the midst of all this, those who should get the blame, Ben Bernanke, Janet Yellen, Jerome Powell, Timothy Geithner, aren't going to get mentioned. Who's going to get the blame? The short sellers, like they always do. Isn't that ridiculous? But that'll come. And they'll ban short selling at one point. Do you think they don't do that? They did exactly that in 2008. They made it illegal. And that worked for literally about 30 minutes. And then the market really started crashing. So 2025 is going to be a kick. I think this is a little taste. I don't think, this is not party time. I think this whole thing's going to, I've made it very clear on my site when I think this is going to end, this sell-off, and it's not long from now. I think there's going to be one last exuberant, things are going to get better, bounce. Everything's going to be different. He's going to fix everything. And that will terminate, I don't know, February, sometime in there. I don't know when. Then things will really start rocking. So yeah, there's going to be another big bounce. I don't know if we need lifetime highs. It could be. Or maybe we're done. But today is I think a Whitman sampler taste of what's coming. Let's check out the charts and go quickly because, as always, there's not much time. A lot of good stuff happening. Thing one, we've broken the trend line. The August 5th CrowdStrike brought the internet down. Bottom trend line has been broken for the first time. That's a big deal. The diamonds. The diamonds have fallen for 10 days in a row. I checked. The last time this happened, if my information is correct, is 1974. Richard Nixon was in office when this last happened. And this is a big down day too. So, we were at lifetime highs just measured it hours ago, especially with tech stocks. But there's a lot of rot going on under the surface. And this is just like I said yesterday, it tastes just like late 1999, where the Dow sort of like can't go anymore. It's done. And tech stocks kind of in a world of their own. So that's an interesting little parallel. Overseas, continue to collapse. Here's EFA down almost 2%. The trend line failure, basically everything we've talked about here is transpiring. Everything. So this is breaking down nicely. That trend line failure is in full force. This is like the trade of the year here, the EWZ. We've talked about this every day for eons. This Brazil thing is working out gloriously. I decided to get cute yesterday and covered like 40% of this. That was stupid because it's a great pattern, but it's plunging still. So yeah, shame on me. The 60% remaining is doing fine, but poo. But yeah, it's working its way toward its target. So Brazil's been a great chart for us. And part of the EWC drop is being driven by PBR, its biggest component. It hasn't quite broken, as I say each time, it's a sloppier pattern. Hasn't quite broken support yet, but it would help if it did. NVIDIA is actually in the green. And I actually, as I've said, I haven't touched NVIDIA for weeks, but I touched it this morning because we pushed higher, and I felt that the completion of this pattern and the failure of this trend line made for a pretty good trade. So I went long puts earlier in the day when we were pushing up against resistance, and then those were working out. And I think in short order we'll emerge on the lower side of that pattern once again. So faked out a lot of people, I think. AMD has just been cruising along. I've had these puts for a while. This pattern completed a while ago. It's just clicking right along. But how is it doing versus the August 5th low? We're getting kind of close, so let's keep an eye on that. It would be nice to break that too. That would push us into a low for almost the whole year, and I think that could be coming by tomorrow. So AMD's doing great, and SMH in general is red in spite of NVIDIA's bounce. Look at that bearish engulfing pattern, pushing off that dashed red resistance line, looking real good. And it's not out of the question that it could complete this pattern. It would take a little doing, but it could well happen. Tesla earlier today was at the highest point it's ever been, ever. We had peaked here at, we were in the spitting distance to 500, got to 488 and change, and it's reversed hard. And it's down over $30 now. So yeah, that's pretty cool. Another gripe of mine, the press conferences with Powell. I'm going off topic here. Almost every reporter thanks him for deigning to allow questions. It's just nauseating. How sycophantic can you be? There's no dignity in that. The man is paid a lot of money to, talk, and that's what he's there for. You don't have to thank him. You don't. Just ask your softball question and be done with it. Thank you for taking our questions. No, don't thank him. Just ask your question. That's what he's there for. So Steve Leisman's watching, he'll listen. Okay. Tilt bonds down again. Interest rates have been rising for a while here, as you can see, because these are bonds that are falling. What have we talked about with respect to rising interest rates? So it's going to kill home building. It's going to kill real estate. That long multi-decade channel that my long-time viewers have seen is going great. Absolutely beautiful. ITB, look at that. Is that tremendous? Look at that pattern. They're breaking down, and it's got miles to go. Just miles. Here's IYR. We hardly ever talk about, down 2.67%, because all these rising rates are just strangling real estate. Let's look at I've got 15 different bearish positions. Let's look at a handful of them, a big handful, and a catch up. Here's Caterpillar. still extraordinarily lofty. Just clicking right along. All I'm doing is just dragging these stop loss prices lower as they go, but we've got a bearish engulfing on that one. Here's ConocoPhillips breaking down some more beneath that wonderful top. Here's old Crocs, CROX. I've added to this today. Got a real nice top on that one as well, the third instance. So I think that'll continue to go nicely. I don't know if I've traded off of it in my life, but I got puts yesterday. It's not much of a pattern. It was kind of a guess, but it's worked out. There's the shooting star on that one, the lifetime high yesterday. Again, this is the worst of these with respect to quality, but no harm. Here's IBM, which is also pretty sloppy, but I would defend it faster than Google at least. And this is down nicely as well. Eli Lilly continues to track lower, down over $9. Another pretty messy pattern. Not everything's EWZ, you know. Here's Netflix. This was another just dumb guess, which has worked out. This one's down almost $20. It was at a lifetime high just last week. And then our old friend Novo Nordisk down again, having pushed up against what appears to be resistance at a dash red line. And we're sinking away nicely from that. So a lot of good things going on. Every single, as I look at my 15 positions, 14 out of 15 are red. One is a little green, which is NVIDIA, which I got at a much better price anyway. So that it's all working out in that respect. So going well. The thing is, you remember the TINA, that acronym for there is no alternative? That was hot back years ago, because bonds were like paying nothing. And so TINA was the rationale to buy stocks. And, TINA's long gone. But I think these days it's going to be more along the lines of there's nowhere to hide, which doesn't make much of an acronym. By the way, the first letter of a phrase isn't an acronym, just so as you know. You got to be able to pronounce it for one thing. But so I don't have a cute short way of saying that, but there's nowhere to hide except puts. So as we look at precious metals, sadly, even those are getting crunched. I got out of silver early today because I wasn't happy with it. I'm glad I did because it really started doing poorly after Powell. But look at this. This is miners. Look at that breakdown. Not good. Gold itself, GLD, working its way toward the upper portion of that channel, also down pretty hard. So yeah, there's no green out there. There's just no green. So in closing, we actually made it on time. In closing, we've had a lot of failures, a lot of breaks. The cubes are still bullishly configured. The cubes have not broken. They're uptrend. And it'll be important to see if they can or not, because this has been the strongest, especially in the past few weeks. And this trend line here, which is also the CrowdStrike broken the internet trend line from August 5th, this is fully intact, and it's actually got a fair bit of sunshine between even the low of today and that trend line. But if we can break below this gap, 517.15, that would be both a failure of the breakout as well as, more importantly, a failure of that ascending trend line. So anyway, I'm pleased that we're done with the Fed for the year. And I don't think there's much of anything left this year to anticipate or wring our hands about. So we'll just keep an eye on these lines, see what happens next. But it's been a very constructive day.